Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 16th of May, and we had another strong week for the market. Semis were up 10%, lost just a little bit of ground here today, but just a big move all around. Ethereum is also up 10%, and we've got many of these markets now in the year-to-date positive column. So let's take a look at these charts and make some sense of it. We're going to start out with a 15-minute time frame, and I posted this earlier on Twitter today. What we have here is the SPY in the upper left. Upper right is the NASDAQ 100. The semiconductors on the bottom left, bottom right is the Russell 2000. You see, I've got three things on here. One is the week to date volume weighted average price. That's that blue line. And we maintained above that pretty much all week here for the S&P 500. So there's never any weakness that even got us below the week to date volume weighted average price, showing that buyers maintained control from that gap right from the start. We had the initial little bit of profit taking, and that's, just as we see on the very short-term time frames, chase the gap or wait for the market to get back above VWAP, and you could have bought here with a stop under here. That's one of my main entry techniques and something I've written about in my book and talk about all the time for subscribers. And we see higher lows above that. So we also saw that while we were doing that, we were above a rising 5-day moving average, and the anchor from this prior low, as well as the anchor off of the low before that. So these markets remain in positive uptrends. The Russell 2000 did see a little bit of a shakeout below the week today volume weighted average price, but the buyers were found precisely at that rising 5-day moving average. So remember, it's the direction of the 5-day moving average in the intermediate term. As long as we're above that in the intermediate term, it's innocent until proven guilty. You definitely have no business trying to short the market while it does that, just like you don't want to be a buyer when the market is below a declining 5-day moving average. So let's take a look on a shorter term time or dual time frame. I'm in the airport if you couldn't tell. We've got the daily chart on the left. On the right is that 30-minute time frame now with those same anchors on there. Anyways, on the daily time frame, as we've noted over and over again in the last several weeks, we've blown through every level that was supposed to be resistance. And as we ran up to those levels and people were shorting against them, it's created more fuel for the upside. And at the same time, has created what everyone's referring to as the lockout rally, meaning a lot of people are waiting for a dip to be a buyer in the overall market, but they're not getting that dip. So instead, they're feeling locked out of this rally. Granted, I was late to get involved, but I've had some great winners this week for Alpha Trend subscribers. We were involved in Robinhood, which we did get stopped out of, but that was a real nice one. HOOD. A number of other ones, Roblox. Anyways, let's get back to the indexes. And you can see the NASDAQ, same story on that daily chart. We blew through every level that was supposed to be supply, but it wasn't. That's why, again, I always call these things levels of interest, not a place to do business. We look at it on the daily time frame and say, is there any evidence the sellers are gaining control? Instead, we saw a big gap higher and saw the same exact thing here. Chase the gap or wait for VWAP, getting involved along there with a stop below that low, and then you ride it to the level that you feel is appropriate with the higher lows. I'd suggest raising your stops underneath these levels. As long as we have that 5-day moving average rising, this market is not going to pull back deep. If it does, it will be highly unusual. Next week, if we see something like this, what would be the scenario? And again, I never make predictions here. If you hear me saying a prediction, you're 100% hearing what you want to hear and not what I said. Maybe we see something like this. I'm not trying to be bearish. I'm saying if this type of thing happens and we get stuck at the 5-day moving average and then below it, then be prepared for the possibility of a pullback. Where would that pullback come down to? Perhaps the anchor off of this low. That would be healthy. It would be a nice thing to see for this market to pull back down into there and create that pullback that will most likely become supported as many people who feel left locked out of this market are now able to participate and provide a bid. What we're seeing a lot more broadening out in the stocks that are participating. You don't have to be first to the low to make money. There's still plenty of opportunity each and every day. As mentioned on the Russell, it underperformed here, but it pulled back right to where it was supposed to find buyers. And that's why we keep an eye on these things, because the institutions do. If you don't believe it, then call this just another coincidence. But we see these coincidences too many times. The semiconductors continued higher here as well. Again, up 10%. Never pulled back below that volume weighted average price from the beginning of the week. never pulled back below that 5-day moving average. If we're going to pull back next week, back up this video 90 seconds or whatever it was, and look for the potential scenario I spoke about in the prior market. I think that the biotechs are heading for 85. I got involved in here. I think that this is your key level that you protect against that. Everybody knows that Kennedy is going after these companies. It's baked in. That's why this market is down and tested this level. We've got the market. It's still not structurally in great shape, but it's heading higher. If you're not involved and looking to get involved, I would think that we're looking for maybe a pullback, something like this, and then to get long strength after a dip. Always strength after a dip, never as it's pulling back. This was a perfect entry right here as it bounced from that anchor off of the year-to-date low, then buying strength above there. Now, the 5-day moving average was declining, yes, but we were getting rid of this data over here. So the 5-day moving average the next day began. There's always the art of the trade versus the science of the technical analysis. Financials continue to be the strongest group out there. I don't know why, but I don't trade them, so I don't really feel like talking about them either. Bonds, they lost ground once again, and they just continue to be a great market to avoid. Energy names still kind of stuck here near that 50-day moving average. As we mentioned 2 weeks ago, getting back above this level got them more neutral. Getting above this level made them more neutral, and now they're positive in the intermediate term. The question is, are they going to be able to power through all these levels the way similar markets have, such as the SPY, the S&P, the NASDAQ, etc. Now, I think it's a little bit different with the energy names because I'm not going to pull it up right now, but if you take a look at oil, 66 is a big prior band of support that has the potential to become resistance. So that might halt any activity. Apple, I think that I'd love to see it pull back down a little bit like this next week and then get set up for a move up towards that 220-ish level. Tesla continues to power higher. Again, it gapped up above gapped up for the week, maintained above that volume weighted average price. Higher lows, that's where you protect your gains with these things. Palantir had a good week. It continues to be the strongest stock out there. This is a key level, this prior resistance rather, acted as support right at a week to date volume weighted average price. These are the types of things I talk about every single day for Alpha Trend subscribers, both on X and on alphatrends.net. Hope you have a good weekend and thank you for tuning in.